Well, good. Well, I will get us kicked off then. Well, first of all, thank you everyone for joining and welcome to the third annual Georgia Cleantech Innovation Outlook this year for 2026. In this event, we discuss 5 global and national trends that will impact cleantech innovation in the state for the year to come and hopefully for more years to come. I'm Andy Marshall. I'm the ED of the Georgia Cleantech Innovation Hub. We put on this event after we read a document. We read a document called creatively the Cleantech Innovation Outlook. But we do the event because we think more important than the single document, the conversation around the document is actually what's important for driving innovation forward. And that's really why we put this event on and kick off the year with it. First of all, I need to do some thank yous before I invite the panelists, but the panelists and I are sitting in the beautiful Cox Cleantech Accelerator at Pond City Market. Big thank you to the Accelerator and Cox for letting us be here today. I also want to thank the Technology Association of Georgia, who has partnered for a 3rd year with us on this, and I'll let Jonathan say a couple words before we get started here.
Yeah, thank you. Yeah, I'm Jonathan Siska. I'm one of the co-chairs to the society. This is our first event of the year. We have a full kind of slate of programming throughout the year. We do a Welcome to Georgia event. We do an infrastructure outlook. This is all later in the year. We also have a podcast, as well as we just published our 2nd annual Clean Tech and Sustainability Ecosystem Report. So I encourage everyone to check that out as well. If you want to get involved at all within the society, please check us out on the TAG website. We have a LinkedIn page, or you can certainly reach out to me individually. But excited, this is a great way to start the year. Everyone gets to put some thoughts into what's happening. So thank you again for doing this.
Awesome. Thanks, Jonathan. Well, we do have a rockstar panel today. And so now, after the thank yous, I'd love to start getting that kicked off. So I'm going to do a quick round to let the panelists in the room introduce themselves. And then we'll get into a quick hitter question. But I always want to know where to start. We're going to go to my right with Gabby. So Gabby, introduce yourself.
Hi, I'm Gabby. I'm the Director for Strategy and Partnerships at the Georgia Network for Electric Mobility.
Hi, James Thomas, Founder and Managing Director at Greenscale Capital.
Alex Bissner, Senior Director at Cox Cleantech Strategy and Investments.
Cynthia Curry, as Senior Director of Cleantech External Engagement at Metro Atlanta Chamber.
And Ben Damiani, the Chief Technology Officer at Cherry Street Energy, local on-site energy producer.
Awesome. Well, I hope you can see we have a very diverse group of people with different expertise. I think that also hints a little bit at the nature of the outlook as well. We hit on a ton of topics, and I think the best thing about it is our panelists here can almost all of them talk about each one of these topics. So we're very fortunate today. I am going to start them off with a quick hitter question, and they don't know which direction I'm going to go again, but they're all ready to go. So first question is always a look back. So as we look back at 2025, what is the one stat or headline that kind of best summarizes 2025? And I'm going to go to my left this time with Ben. So.
All right. Well, I've got something that hit me pretty hard in the middle of the summer was we had this huge power outage in Spain, and the immediate messaging on that was to go after distributed energy resources, and only later to come to find it was really more over voltage and other quick on-off parts of the grid that was really the big problem. And I think that was something that was kind of eye-opening to me is we just have to pay attention to what's in the media right now and couple that with the emerging technologies of artificial intelligence requiring a significant increase in the amount of energy that we're going to need. So on the plus side, it was really exciting to see all of the new energy and all the new ways that we can supply that. So I thought kind of like nestled together there with AI being both a positive and also a be careful is something that stuck out to me this year.
Yeah, I hear it. My favorite stat of 2025 was the fact that the clean energy market in Georgia grew 5 times faster than the rest of the entire Georgia economy. So as, at the Metro Atlanta Chamber, we're always trying to unleash Atlanta's ambition, and my goal and the Chamber's goal is to make Atlanta a #1 global clean tech hub. So I love seeing that the jobs and investment in clean tech are making such an impact in Georgia, and I can't wait to see that grow and grow and grow. And the Cox Cleantech Accelerator is helping that. So
yeah. I was pretty surprised in Nat Bullard's annual decarbonization deck. He had a slide about global gas turbine orders in demand at 100 gigawatts, global supplies at 60. And that imbalance is set to stay the same through 2028. And I think that kind of epitomizes where we are right now. There's such a dislocation in demand. And when you have that much of a gap where you have this really demand-driven market, that's generally a good thing for investors and for innovation. And so I think that's going to be just kind of fuel for the fire to keep this thing going.
So hopping off of the gas thing, 2025, at least for us from an infrastructure standpoint, was the year of storage. So my stat's going to come from battery storage, which is for the first time in US history, we actually installed more battery storage on the grid than we did bring natural gas onto the grid. And part of that is, the backlog in like turbines, but also storage costs coming down below $100 per kilowatt hour. And, AI data centers driving a lot of demand for like grid resilience, and storage is the fastest way to solve that problem.
Yeah. And the headline for me on the EV side is that EV charging infrastructure was deployed at a record pace in 2025, even though there was like a lot of policy headwinds in the US. And a lot of that growth was being driven by the private sector, which is really interesting. We now have 40 to 50% as many charging stations in the US as we have gas and refueling stations. So the real gaps in charging infrastructure now are more on the reliability and experience side. There's still some gaps in some very specific fit for purpose cases, but we had the fastest year of DC fast charging deployment, as well as a lot of urban charging infrastructure deployment that we've had in any year in prior years for the US, especially specific quarters like Q2 of 2025.
Yeah.
Great.
Yeah, I love that all. I love grounding it in stats, right? In real numbers, right? The dislocation of demand, I haven't heard that phrasing. I'm starting using that one for sure. Well, good. So now we're going to jump into the meat and potatoes of the panel. We had 5 different topics this year. The first one that I chose to talk about was the resilience of clean tech investment. And now some people may look at me and say, Andy, it was down 20% last year. How is that resilient? And part of me says it could have been worse. But the other thing I look at is if you actually look at the trend over time, right? We've had a significant growth from 2020 to today. So the CAGR is positive, but you also have this big sort of reset after 2021 and 22 when you had a little bit of over exuberance. So my comment on resilience is long haul. We're still on the upward trend, right? Although we do have some pullback. I do want to go to Jones here for my first question, an investor, albeit a little bit more on the infrastructure side. Some of the move in the investment side has been away from infrastructure. I'm sure you've seen that, felt it. What is, from your perspective as an investor, sort of what's driving some of that move away, and will we see some of this resilience staying, or will it go?
So, it's easy to look at that 20% number and think like, okay, like, people are stepping back. It's kind of like a risk-off market. But really what we're seeing is a lot of like the kind of tourist capital that come in, especially on the back of like very healthy tax credits being offered. That market's starting to pull away, call it a less sophistication around dealing with the credits, as well as the policy volatility that we've seen from the current administration over the past couple of months. But really what you've seen is a reallocation of capital going from like, okay, we're looking at like, where can we get the best subsidies to, what makes the most economic sense long term. And a lot of that is being driven by, AI and hyperscaler CapEx coming online, continued resilience around load growth, and a realization that the grid just isn't designed to shuffle power around as well as we thought it should be. So bringing along, upgrading transmission infrastructure, obviously battery storage, which I mentioned, it continues to increase. And we can't ignore that, solar installations have still been pretty resilient last year, right? All over the country, especially in Georgia. So we can look at the headline stat, but there's like a lot of nuance under it, and we're continuing to see capital coming into the space, chasing after the new opportunities that are coming. So, think supply chain resilience, for example. The administration has made it very clear that they want energy security. They want domestic supply chains built out. So we're continuing to see capital go into critical minerals, battery materials, transformers, getting more of that production built out here, as well as just general and nuclear. That's the other big one, geothermal as well. So
those are usually big investments.
And those are pretty large capex investments going in the ground.
I like that point. I mean, I think it's a shift, right? I looked at Cleantech VC. They put their predictions or their poll out as they pulled the industry on that, and I think over 500 some odd people responded, and I think overwhelmingly it was resilience and supply chains and energy was where the investments were going to be, and so I'm going to go shift over to Ben now, our energy expert. So as you see the shift away from toward really grid innovation and technologies. What do you think is driving the urgency of these investments? Obviously, we talked a little bit about the dislocation of demand, but is it just dislocation of demand, or is there something else there too?
Yeah, I think the industry has changed in the last 3 or 4 years pretty significantly. We historically, when we would sign on new customers, we'd come at Cherry Street and we'll do a portion of your bill. So you pay a power bill at the end of the month. We take 30% of that, let's say, and then we turn it into renewable and distributed energy. A lot of the requests early on could have been around sustainability or trying to fix their cost a little bit, predictable load. What we've seen or trying to maybe drive towards an off-grid solution or something a little bit more niche, small market. What we're seeing more in the last 12 months and even going forward is more of an effort to address a problem, right? Like some grid drooping or business consistency, like keeping the lights on when storms come through and things like that. And that's exciting, right? Because those are real opportunities to address. And then I think what's kind of interesting, kind of bouncing off what Jones had said earlier with the investment community. So we at Cherry Street need investment to grow and accelerate and capture more customers. But at the same time, we're going to customers and we're paying for that infrastructure. So we can involve and bring in new technology to a customer on our risk, hopefully the expert on that energy deployment. So I think it gets to be a really exciting opportunity to be able to drive some of this innovation.
Yeah. I mean, I've been in for the past 10 years, been in distributed energy as well in some way, form, or fashion. And a lot of it is aging infrastructure too, right? I mean, this is the other trend is you've got this dislocation demand in the context of aging infrastructure, which is a dual whammy on the utility side, on the energy side. So I'm going to pivot over to Cynthia real quickly for a second. So as we think about the investments, you're in touch with the corporates here in Georgia. How are they responding to the new funding landscape? Are they filling gaps? Where are they moving? Where do you see that?
Yeah, I think that we are definitely continuing the train. So, I mean, the funding around electrification and clean tech and everything in Georgia started way before we started getting money from actual federal government. I mean, it started with SK. They came here years and years ago. So we do have that history, and we are continuing to grow that. Alex is the prime example of Cox Enterprises, which is the gold standard of corporate community engagement. And I know Alex is at Devos right now, like fighting for the earth.
Yeah.
So, I mean, I see them as the gold standard for corporate engagement. They've launched this Cleantech accelerator that we were only dreaming about when we sat around this table 3 years ago.
Yeah.
Companies like Mercedes-Benz and Allstate are putting huge money into the sustainability of their stadiums. I mean, I think sustainability is everywhere now. It's not just a clean tech space and a clean tech lane. So, I mean, the stadiums, Mercedes and State Farm are platinum lead, and they're diverting 90% of their waste. So, I mean, and we're going to be able to share that with the World Cup coming. So I see the corporates, Honeywell's another big one, you know, we're making space in the built environment as doing it because it's good business and it's smart economics and it builds jobs and investment in a long-standing way while doing good for the world. So I really feel like the corporate community in Atlanta is behind the clean tech space in so many ways. And it doesn't have to be labeled as clean tech. I think that a lot of the corporations are doing things because it's good finance, it's good economics, it's good to get their talent in the right way that they want, and they want to be a good community member. So I love watching all the corporates in Atlanta lean into this space, and I'm extra thankful for Cox and all the amazing things that they have done for Atlanta and Georgia and us.
Yeah, I do want to just hit on the point around the good business piece, right? I mean, I think at the end of the day, this is, you know, the stuff that's going to carry on, and I think Jones, you hit on it in your answer too. The stuff that's going to carry on and get invested in is the stuff that, you know, has a payback, has a business case, you know, and I think more so than ever now, right? I think the focus is going to be there, and so I think as we look forward, those are going to be the durable businesses that continue on. So.
Agree.
I totally agree. If I could build on that,
Yeah.
For a long time, our team has been thinking about clean tech really as economically enabled conservation, right? It's like $1 going to a nonprofit is an outstanding thing to do. But $1 going to a for-profit who is self-funding, that is a flywheel that dollar gets so much more mileage out of.
Yeah.
And so it is so important to get that middle part of the Venn diagram. This is both economically attractive and environmentally attractive. It's okay if it's one or the other for a while, but at some point they really do need to converge for something to have kind of durable impact. And so that's usually the area that, or the kind of central tenet we try and look for in our investments.
Yeah, and you're helping startups. Engage is another perfect example of the corporate community leaning in to create these companies that will create these jobs and future solutions. So, I mean, corporates have a huge space in this nurturing of this new economy and this new purpose-driven work that I think we are so lucky in Atlanta to have the corporate prowess that we do. And we love that everyone leans in. So, yeah.
I'm going to pull on two threads there now. So yeah, so one was so the efficiency piece, right? So talking about electrification, right? And electrification, you know, generally being more efficient, but then also something that works in Georgia too, right? And so there, a concept that we threw in. So go to our second topic, which is the era of the electro-industrial stack. That's pretty wonky and nerdy, but let's make electro-industrial stack mean something. Yeah, I mean, it's the stuff that turns, you know, sort of, I think we wrote in there, you know, bits to atoms, right? It's that connection. So these are the batteries, electric motors, power electronics, and the chips that kind of will take the stuff that AI generates, autonomy, and then actually turn it into action, right? And so the challenge here is that a lot of the supply chain for those for those components is not here on soil, U.S. soil or North American soil, for that matter. But the other piece of that is the stuff that is on American soil or North American soil is in Georgia and along this battery belt, right? And so it's a very exciting time to be there. And so I'm going to go to Jones with this question. So from an investment standpoint, do you see specific opportunities in investing in the electro-industrial stack? And again, just keep that wonky word in there unless you have a better one. But do you see what are opportunities from an onshoring and investment standpoint?
So we're kind of looking at the supply chain dislocation, disruption that's happening kind of as like a lead time arbitrage play. So there's kind of two angles to it. One, obviously, people are trying to shore up domestic production for an additional layer of supply chain resilience. And then there's a second, which is that there's a very long lead time on existing kind of like procurement that's happening. So that's serving as a catalyst for new startups to kind of serve the ecosystem. If they can bring on supply fast enough, can charge a premium to the market for bringing that supply on. So normally, you know, you come out with a new technology, you're significantly overpriced relative to the market, you struggle to gain traction. Now there's kind of an economic reason to pay that premium. So we're seeing innovators kind of capitalize on that, saying, okay, this is our kind of like way to get into the market with this new technology and manufacture it at a price that still is relatively profitable and we can raise capital or finance on the back of, with a view that long term, those costs will come down as we scale volumes. And this is we need robust supply chains, we need alternatives to China, companies are willing to pay for like fast supply within the next year. That's going to be our entry point into the market.
Mhm.
So you're seeing that, in transformers, you're seeing like shale had everything, like everything's now turbined, right?
Yeah.
Right? If you okay, we have a supersonic, like Boom was doing this, right? We have a supersonic airliner, but actually what we have is a scramjet engine that we can repurpose as a jet fuel driven turbine for data centers, using that immediate demand as a way to kind of catalyze their future growth.
Yeah, demand is a great pull, right?
Yeah,
I mean, I think there's definitely the innovation pull for sure. So Gabby, when we think about these technologies in the electro-industrial stack, it's even a mouthful to say. You're an EV expert, right?
Yeah.
But all these components build the other things, the drones, the robots, the appliances, right? And so as you think through this, are there any vulnerabilities in the supply chain that, let's say on the EV side or on the rest of the electric tech stack that you want to point out there, or any of the components that are important?
Yeah, and I'm actually going to borrow from both of what you guys said. So one of the most important things that the global EV boom kind of exposed is how thin and fragile the US electro-industrial stack actually is. So as he had mentioned, we've only been manufacturing batteries in the US meaningfully for the electro-industrial stack for the last 5 to 10 years. And the first one was like a Tesla Panasonic gigafactory from the mid 2010s. Yeah. And then there was a whole lag. And we kind of assumed that, this battery and component manufacturing was going to be very low margin and low value and offshored most of it. And that kind of came back to bite us in the past 2 to 5 years of real acceleration of demand and dislocation, as you guys have been kind of talking to. And the biggest vulnerability, as you were kind of mentioning, is not just the battery itself, but it's all of the middle of the stack around the battery. So your inverters, motors, power electronics, transformers, and grid equipment, because they are these shared components that sit across your EVs, drones, data centers, robotics, and industrial systems. What's really interesting is in the piece of supply chain innovation is how we can think about creating not just a domestic supply chain, but a domestic supply chain that operates in a way that's more vertically integrated and less of these lateral relationships. And that's kind of the real opportunity of the battery belt. And what I'm most excited about is, can we take those vulnerabilities and kind of build what becomes a durable electro-industrial backbone in the US that we simply just do not have today.
Yeah, I think any place where it's going to happen, I think that battery belt is the location, right? And I think, we were talking beforehand, Ben and I, just about like innovation and, how important it is to be close to manufacturing when you're innovating, right? And so the cycles become a lot quicker and all that. So I do think all that makes sense. And then look, you can build an EV here, you can build a battery here, you can build drones and robots here. And when I say here, it's Georgia, right? So,
exactly. Yeah. It's very much like a manufacturing depth, scale, and integration play.
Yep. So I'm going to pivot a little bit and go to you, Alex, on this one. So we talked a little bit about the sort of the building part, the upstream part of the supply chain, but Cox is also heavily invested in the back end of the supply chain as well, right? The recycle and reuse. And so this will maybe foreshadow to a second topic that we'll hit on as well. But could the circular economy be very supportive of a rebirth of the electro-industrial stack here in the U.S.?
Yeah, I think definitely, right? Mm-hmm. I think the mega trend we're seeing here is kind of over demand, right? That drives innovation, especially with circularity, whether it's critical minerals, whatever it is. I do think that creates a really interesting backdrop on how can you repurpose a lot of what we already have, right? We are a consuming society, right? We may not have a lot of minerals here, but we have a lot of stuff.
Yeah.
And
Yeah.
so you put all these things together. I think we have the right ingredients for it. The question is going to be which one's the most economically attractive, what are the right applications, the traditional kind of product development questions. But in short, I think we're in a really good position to capitalize on it.
Yeah. We're going to hit on this one again in a second too, and I think we'll unearth a little bit about some of your experience on the circular economy around plastics, and then what we learn on the industrial side of this as well. So, so we're gonna have to wait. So hold on, audience, for that one. We are gonna delve a little bit more into electricity again, because that is the hot topic these days, which is exciting. So glad I picked this industry to go into 10 years ago. But and look, I picked distributed energy, and the innovators, not really the innovator's dilemma, but for a long time in innovation, the key in a metaphor is vitamin versus painkiller. You want to build a painkiller because people are going to go buy that right now. A vitamin they may buy, but it's always nice to have. With demand growth, with speed to power being so critically important these days, I think the idea of DER being a painkiller is starting to happen. We're starting to see it. So. Maybe the question to you, Ben, is can it really, at the scale, become that painkiller that we've been looking for and we need right now?
Yeah, I hear so many things in this discussion from what Gabby is saying, from what Alex is saying, from Cox, in recognizing not only is the way that we generate electricity changing, the way we consume it is dramatically changing.
Yeah.
And data centers don't consume energy the same way that historically, giant manufacturing plants do, or electric vehicles, same thing. And a lot of the way that we're doing things are different. And then the time to market, that also creates these opportunities where if it does take 12, 24 months in order to get gas turbines, or nuclear power plants might take, 5, 10 years to come online, that creates a little widget of an opportunity to come in that now distributed energy where, sun's out, power's out, battery's there. There's different battery chemistries that can supply power faster, more cycles, or longer direct duration. And so a lot of what I spend time doing is going around and evaluating different energy sources, like can we address these problems or these pain points within industry? Because different forms of power, we say it that we want in all solutions, but really absorbing how that's going to happen, I'm learning all the time.
Yeah.
And so getting to see some of those firsthand problems where you hear data centers burning through traditional power sources, but needing new solutions, it's really an exciting time.
Yeah. Well, I'm half tempted to go in a different direction with my next question to you. So you said something that resonated though, is we use power differently. But then we think about DER, and that's actually a very different way of generating power as well, right? But then you also went in and we talk a little bit about intermittency of renewables, right? We all know that problem. We don't always have it generating when we need it, but you also talked about the batteries. So perhaps you talked about long and short duration. So there's a lot to unpack there, but maybe what I want to go at is from the battery standpoint, is that I've always long thought it to be the holy grail of solving some of this problem, but is more distributed battery what we're going to see? Is that really the solution? Jones mentioned it, we deployed more, but I think a lot of that was centralized still.
Mostly grid, yeah.
Yeah, but are we going to see more distributed battery?
Absolutely.
Okay.
And let me broaden that a little bit, just say distributed energy storage,
Yeah.
right? Because there's different methods that can be used to deliver power in different ways. And kind of embracing the intermittency of what solar is. Sun comes up every day, so that's good predictability there. And it's at the point of location, so now you're also mitigating the need to transport this power. But you need energy storage to address some of that intermittency. But the way we consume power is intermittent, so maybe we can marry those intermittency parts together with solar plus the energy storage, or wind plus the energy storage, or natural gas plus the energy storage, geothermal. There's, I think, addressing the challenge of intermittency can take a lot of different forms, and those are good business opportunities, and it's difficult. So I think it's challenging, but that also makes a good business, right? If it's easy, everybody does it.
Yeah.
Yeah.
So I think I'm excited about that. And then electric car stuff, I mean, that's the OG out there. And, you know, putting that, you know, you start looking at an office complex like this, and 10%, 20% of your people drive an electric car, you may come close to doubling your energy demand that you would need here. And most of us come to work during the daytime
Right.
and go back to that sun. It shines every day. You know, so there's a lot of exciting things I think that can.
I want to have a panel someday on mobile power plants.
Yes.
And so
Small
Gabby,
Gen 4 small nuclear reactors.
no, I'm talking about cars. Mobile
okay, that's
cars. Yeah.
Sorry, I went a very different direction.
Yeah.
You know what I'm talking about.
So let's so I'm not going to ask you my next that other follow on, because that was, I think, what was important to talk about though. So I'm going to move over to Jones and put this into context in Georgia again. So you know, Georgia DER obviously, I think, benefited from a lot of subsidies over the past. A lot of those subsidies are now gone from the tax credits, etc. Who's going to fund this? I mean, is the capital there to get, you know, these types of technologies behind the meter?
The capital is definitely there.
Yeah.
The capital has just gotten more selective in terms of where it's going, right?
Mm-hmm.
The shift in the profile of the federal subsidies has meant that investors are looking a lot more at what state level, local level incentives look like to shore up the economics. And, you know, there is no particular kind of like imperative driver right now other than like AI kind of like demand where like, yes, we have to go fulfill this because the end return is just way too high to ignore.
Mm-hmm.
But otherwise, they are being selective, saying, oh, okay, the state or this municipality has a very good kind of like, you know, feed-in tariff profile or, you know, good incentives for demand response, or, you know, the grid ISO is providing various kind of like rebates associated with ancillary service revenue, for example. You know, that's a very good area to go deploy capital because we can see a high IRR associated with that, right?
Yeah.
So that's probably what you're going to keep seeing is more of that dislocation in terms of where the capital is flowing, but it's definitely available out there. We continue to see infrastructure funds raising, you know, billions of dollars of capital to continue to go after infrastructure opportunities. A lot of those, unfortunately, will continue to focus on base load power, focused on compute and data centers, but distributed energy, electric vehicles, like those are still continuing to see capital flowing to them.
Yeah. My big thing is if rates start to go up, like the business case for DER just becomes so much better, right? So I'm hoping there's the capital to get the initial deployments out there, and I hope people can access that. That's the big thing that I think we'll need to see. Go ahead.
Yeah, well, if I can build on that, Ben, you're probably seeing this too. But like what I've seen is a lot of like DER developers are essentially re-underwriting their pipeline, right? In a new world without an ITC, like, yeah, that hurts. Like the marginal project became attractive. Yeah, the ITC's gone. It is no longer attractive. Like that's okay, but this is talked about kind of how big is the market, not a binary, is there a market, is there not a market? So I totally agree. There's capital out there. It just has to flow toward the kind of top priority projects that return. And then as costs come down, those marginal projects kind of come back into the story. So I see it as more timing than anything.
Yeah, we just need to see it kind of like where the new equilibrium in a post kind of like ITC 30C 30D kind of like tax credit world settles out. And I think next couple of quarters we'll see that kind of imbalance settle, and that means yes, rates will probably go up, cost of capital starts moving up. But once you kind of hit that equilibrium, you start seeing capital re-enter the market with less uncertainty.
Yeah. So Cynthia, you deal with talk to a bunch of our corporates around here, right? A lot of what we did to attract companies here was low power costs. Do you see some of the companies that you talk to day in, day out, are they looking more at DER as a solution? And how do they think about that?
I see the innovation spreading out into different areas. Like we're seeing a lot of focus on eVTOL, right? Like into the defense type areas, aerospace. So things that are huge Georgia industries,
Mhm.
right? Just a little bit presented a little bit differently, but it's still a lot of the same innovation that's happening and the same money that's going in.
Mhm.
So we're seeing a shift in that. And then also, I mean, we're seeing the continued partnerships. I mean, I say it every time I'm anywhere is collaboration is Atlanta superpower. And we are seeing that in the form of innovation makes prices go down, right? So the Hyundai relationship with Georgia Tech and the battery lab that they're building. I mean, that will bring the cost of energy down and the cost of all those technologies down. So things like that make a real difference. And as innovation happens and innovation becomes more mainstream, then we'll see those technologies be more affordable and more adaptable. I mean, Rivian, I think from the time they released their first car, they've dropped 44 something pounds of just wiring within their car. Just little things like that. So, I mean, Cox Cleantech Accelerator, Engage, Georgia Tech, all of these organizations and corporations that we have in Atlanta that are pushing this innovation forward are making it more affordable and safer, less risky investment. So we're seeing it diverted into a wider area, but definitely still top of mind. And as the innovation grows and people get more adapt to it, it all becomes more affordable. And we want to do that all here.
Yeah, I mean, power hungry companies are still coming here, right?
Absolutely,
So that you brought
100%.
it on.
Yes.
And I think one of the big things that is maybe not there quietly anymore, but like data center loads have not necessarily always made rates go up either. They've actually, if done correctly, they can actually make rates go down.
Georgia Power is trying to use them to make rates go down.
Exactly.
So when they consume that power, they're paying for it, and that's not getting pushed on to the consumer. So yeah, I mean, all that work is happening.
So yeah, I think that's a great cap to that conversation.
Yeah.
There. So yeah.
And are we going to talk about circular later?
We are going to talk about circular.
I mean, I have some
We're
comments
also
on
going to
that.
talk about more EVs too. EVs kind of how we're going to crescendo here, right? At the end. But I do want to pivot to circular economy. Go back from where we left off with Alex there. Look, circular economy. I conceptually love the idea. I think short, small, efficient supply chains work really well. The challenge is it's been hard to take off. I mean, I've been reading stuff on this for a long time, but it's they're difficult to get on. And again, circular economy, you think very broadly, like economy wide, but really it's industry wide, segment wide, supply chain wide. I think we started to talk a little bit about industrialization here, right? And I think there's a great opportunity. Cox has obviously got in on the plastic side with Nexus. But as you look at opportunities, especially around this industrial circular economy, we've got the battery manufacturers here. We've got folks wanting to build graphite plants. We have mine tailings that have critical minerals in them, right? And so I think there's a great opportunity here. What do you think you would need to actually stand up a real industrial circular economy in Georgia?
Yeah, so I think there's two challenges that come to mind. So the first one is really more of a general clean tech startup challenge, and that's a lot of these companies, their core competency and the muscle that's really big and strong is R&D and innovation. Like that's how you get on the map. That's your license to play and license to win. But to be commercially successful over a long period, you need to then transform that scrappy, really innovative business into a scaled operator.
Yeah.
Right? Where operational excellence now needs to be your new core competency. And those are just very different skills. And so I think that transition of what do you need to do to kind of learn the ropes and to kind of build that, it just takes time. Yeah. I think that's a reality, which is okay. And I think that the other challenge that's specific to circularity is around feedstock variation, quality, et cetera, right? Most the conventional or the kind of traditional industries have this benefit of their feedstocks generally pretty homogeneous. It's at least predictable, right? When you're looking to repurpose other feedstocks and turn it into other value-added products, you're taking it from a bunch of different places. It's probably dirty, so maybe contaminated, different sizes, just different types. It's just a new dimension of complexity, which isn't unsurmountable, right? It's like Nexus has done it. They have reached commercial scale with recycling mixed plastic wastes, various types, thin films, rigids, different sources, and they are doing that to create a really compelling product. So it can be done. I'm super proud of them. That's one of the reasons why we're so excited about their long-term attractiveness. But that is one of the realities it's just tough.
Yeah.
You're dealing with other people's kind of trash and waste.
Yeah.
You're turning it into something that's value added. It's just this added level of complexity that I think you just got to go into it eyes wide open of how do you manage that dynamic? Is it through sorting? Is it through prescribed kind of recipes? Is it through cleaning? That kind of stuff. And so who knows, maybe there's an opportunity for that kind of upstream feedstock piece here in Georgia.
Yeah. Go ahead.
No, I kind of disagree that the circular economy hasn't taken off in Georgia, because from my perspective, I think it's driven the economic prowess that we've had. So, I mean, with SK and all the companies here, I mean, as an economic developer, there have been so many suppliers of all of those companies that have moved to Georgia because they are close. So when I say circular economy, it's not all reusing and recycling, but it is a shorter supply chain cycle that cuts down on all that waste and transportation and carbon and all that. So, and I know that we had SAF last year on the dock, but I think SAF is going to be a huge thing this year. We are still having those conversations. There's a lot of conversations between Delta and the agriculture and forestry division here. We're part of those at MAC. We just had one of Q-Cell's companies came here. One of the very first solar recycling companies ever in the country is coming here. So I see the circular economy, it's not going to be immediate. It's not going to be overnight, but we are attracting all those companies that are supplying all these other companies. And so we're building exactly the Cleantech ecosystem. And I do feel like when companies like the plastics, what's the name of it? Nexus Circular. Yes, thank you very much. And we're just seeing really great examples of how circularity can work. So it's not overnight, but I do think we are building a really fabulous circular economy in Georgia.
If I can just put.
Whoa!
Sorry.
Everyone's okay, y'all.
Somebody was really.
Everyone's okay.
Yeah.
If I can just add to the circular economy part, one thing that we are experiencing is we've had projects where, solar panels are typically about the size of a door. And then batteries are also, the size of a package. So when you're confronted with, getting those off of your site, either they live their life cycle or whatever, what we have personally found is, there's companies either in Georgia or as far out as South Carolina or North Carolina that we can make a call, they come pick it up, and it's economically viable,
right?
Because money drives this.
Yeah.
So what we're seeing is we have a big item where to throw out a solar panel is a bit of an effort. To throw out a Coke can is a little easier, but we're pretty good on establishing that mentality. So I'm optimistic about that circularity, but it does have to be economically viable, shortening the, that's a different way to think about it. What Cynthia was saying was shortening that whole cycle to get it. That I love that for innovation purposes as well, and it just hits on a lot of it.
Well, I definitely think there's an innovation piece to it. I also think as we look at it, there's a cost piece to it. And I want to go to Gabby on this one. So Gabby, you got Redwood Materials, you got Ascend Elements, you got a number of companies that are doing the battery recycling component of this. I know that's focused on just the battery part of this circularity, but from your expertise, and Alex mentioned, sorting, right? That's one technology potentially, but are there other technologies that sort of unlock the circular economy, what's that called, the industrial side of it, that would make it more viable here economically?
Yeah, I think what's interesting is that for us in the Battery Belt region, it's already economically viable, more economically viable than virgin mining, largely just because of scale. So the reason why it's profitable for Ascend Elements and COTS EVBS actually, etc., is because they've overcome the issue you were talking about from R&D to scale, and they do it really, really well at scale. Actually, COTS EVBS makes some of the purest lithium black mass that you can get on the market. Very top quality situation. The main thing, which we've kind of all been discussing on cost, is part of the how do we make sure we have immediate bios for what you're producing, and that's always like a weird timing piece. But then there's also the fact that the demand for these things keeps changing, and that's also where the profit margin issues are kind of hitting. So it's like less of a cost thing because the innovation is kind of already there. They do it really well. There are other ways that you can do it that are like metallurgical, like chemical metallurgical methods to be even more efficient than the like physical recycling of the batteries and the critical minerals. But whether you're going to get much better margins than if you could figure out the timing and demand, which still remains very volatile, remains to be seen. I think it's more on the timing and demand.
Yeah, it's hard to jump on any learning curve if you don't have the the volume part, right? Whether or not we can argue whether or not this would be on the same learning curve as like the solar and the microchip type learning curves are a different learning curve. But look, regardless, like if you can't have demand, like it's really difficult to get on any learning curve.
And the ones who are doing it at scale and doing it at scale well have big corporate buyers who basically just buy all of their black mass. Right? That is it's.
Yeah. I'm going to move to Jones because another component. This starts to get into your bailiwick in terms of investment because a lot of this stuff is your sort of first of a kind, nth of a kind type projects. So, what do you think is needed to make capital flow in this particular space? Again, because I imagine a lot of it's first of a kind. Like, what are you seeing? What gaps are you seeing? Either it could be the companies or just even the folks who want to fund it.
So I'll answer that question with a slight shift, which is probably tying together what almost everyone here has said. As every investor in circular economy knows, like getting over the tech hurdle is just the start of the problem solving. And then the company goes from an R&D company to being a logistics company, basically, of figuring out, okay, where are we going to source our materials? How are we going to transport it to our facilities? How are we going to make sure we have enough volume of feedstock coming in on a consistent basis to keep operating this plant at a volume that we can sell to our buyers and that makes economic sense for the continued operations of the facility? So transitioning from R&D team to capable kind of like operators, that's kind of the step process that we've been paying attention to. And I think what a lot of investors outside of venture capital who are funding a lot of the companies, for example, you talked about in solar panel recycling, battery recycling, pursuing understanding what new solvents and extraction rates could look like, to how do we make this a scaled, high volume, reasonable profit margin kind of like business. Yeah. So when we're looking to underwrite a sorting facility or a processing facility, we're not just paying attention to okay, what does the offtake kind of like profile price look like? What does the technology's kind of like extraction rate look like? It's also like, okay, what's the competency of the team in terms of partnerships with corporates to source the materials? What does their logistics operation look like to be able to bring those goods to their facility? Yeah. And can they operate this facility in line with the numbers that the Excel model says that almost never.
Really? Excel models are never. Oh my goodness. But no, I think that actually ties in really well with what Cynthia said earlier around SAF too. SAF is kind of the same challenge, right? It's look, if we can turn whatever biomass or whatever into this stuff, but how do I get the biomass? How do I get it repeatably? How do I get it cheaply? And that's a huge, part on the, first of a kind you have to learn, right?
Exactly. But that's also where the short supply chains come in, which is if all of your suppliers are within a close geographic kind of proximity, you know who they are, the volumes are consistent, that significantly shortens your uncertainty on this kind of like feedstock side.
Agreed.
So there is probably a play for these kind of like feedstock aggregators to start coming in, start building relationships, start getting the materials in, providing a high quality kind of like input to these companies that need them, for example.
Yeah, makes sense. So I'm gonna do a quick pause and talk to the audience. So we're gonna do some Q&A. We have one more section to talk about, and we got about 10 minutes before the top of the hour. We'll continue on a little past the top of the hour. But if you want to drop a question in the comments, I'll pick it up when we get done with this next section. So thanks. So let's go to last but not least, and Gabby's been waiting very patiently to talk about EVs. But it is a very critical juncture for EVs. I think it is. I mean, I think we've started to move from the early adopters into the midstream adopters, right? I would say I bought an EV, so therefore now it's definitely and look, I'm a clean tech guy, right? And so and I love my EV, by the way. It's a Rivian. But look, there is a lot of pressure, I think, because some of the subsidies have gone away, which make a big dent on the economics for some folks. But at the end of the day, if you still look at total cost of ownership, it's still less, but we still need to do work for that upfront cost because that's a very important component. So, look, if that is one of the biggest things, right? Upfront costs, like what are we going to be able to do to take the cost out? Are there any silver bullets, or is this just a lot of hard work?
It's a lot of hard work. So yes, 2025 was interesting because we've seen incentives fade, not just in the US, but actually we saw incentives vanish from China in 2022, and they've also been fading in Europe from 2022 through 2025. So in a lot of those places, we saw the typical dip in demand, recovery kind of cycle. Yes, the battery remains the most expensive part of the vehicle, not just in terms of the battery itself, but also overall manufacturing cost. And the EV success piece is not just going to be a demand problem for the EV itself, but also a systems problem. So there's the affordability, reliability of charging infrastructure aspect of this, which is the infrastructure needs to catch up, the affordability needs to catch up. But to your question on the standalone product category itself, there is, yes, battery innovation to get costs down, but I don't think that is just the solid state battery piece that everyone tends to be
we all hang our hats on. Someday solid state batteries will happen and everything will be better.
Hangs the hat on that, right? Where it's also a systems integration problem. It's also a higher manufacturing yields problem. So you're getting your losses a bit better. But then also, as we've all talked about, circular inputs, because really where the cost competitiveness for a lot of this really breaks down to is the verticalized supply chains, unfortunately, which I feel like we keep coming back to that. I'm really excited about the used EV market for mainstream adopters right now, because you can get a lot of used EVs off lease, and the off lease used EVs are expected to double and triple in the next 1 to 2 years, which is actually very recent Cox numbers on that. And the companies that figure out kind of the systems level mix of industrial policy, grid planning, and material strategy are probably going to be the ones who win, because it's not just about EVs as a standalone product. It's also just the overall experience of owning an EV together.
That is perfect, because I wanted to tweak my next question slightly. And so those expectations, the consumer expectations, I mean, it's, look, 300, 400 miles of range, I need to charge. I mean, I'd like to be like a gas station, but heck, it's going to be real hard to do that, make that happen. What are those expectations, and what do you think are the ones that are, maybe nearest term to us being met consistently? And then what are ones a little further out?
Yeah, so I mentioned earlier that you have 40 to 50% as many charging stations publicly as gas/fueling stations. And there are all of these touch points where you as an EV driver trying to charge is just really not seamless. So there's one, the waiting to get a charger, coming to a charger and someone's parked in front of this. This is something we talk about in our charging infrastructure roadmap for GNM. So a quick plug, you can go read that and I break all of this down more in depth. But the big things are, one, people want more easy wayfinding. So not going across several different apps.
Yeah.
Plug and charge kind of helps with that, but it's not as well, out in the world yet. They want longer range. There's of course the lovely McKinsey stats around people want wait times of 20 to 30 minutes or less.
That's what I pulled in.
Yeah, but there's also a real piece of people show up to the charger and it doesn't work. So there's a stat from JD Powell on Charger Help that 1 in 3 charging sessions fails on the first try. So they might eventually get it to work, but you have to do the USB trick where you plug it out and plug it back in.
I've had that problem.
Adapters, chaos. So it's really one of those things where charging is not this seamless, frictionless experience yet. And that's partially on the automakers, and it's part of why the new EV sales are rough. It's not just an affordability problem, it's also a charging infrastructure problem. And that's something I'm partially really excited about, which is kind of conflicting statement with the announcements around EV battery manufacturing capacity getting diverted in a lot of cases. So Ford, GM have made these announcements from vehicles to grid, because I'm hoping that it's a critical opportunity for the grid infrastructure and grid capacity to catch up, where a lot of places that needed charging infrastructure couldn't get it because of grid and load management issues. And we've always been in this weird like chicken and egg problem of, is EV demand going to wait on the infrastructure, or is infrastructure going to wait on the EV demand? And we've seen like a really interesting decoupling where private sector folks are investing in a lot of EV infrastructure in places they know they'll make money, which means a very uneven EV charging infrastructure landscape. And then the places that are really hard to put infrastructure just don't get it, even if they need it and the utilization could actually maybe be good. And the grid infrastructure upgrades that are getting kind of pushed by a very strong pull from data centers means that we might actually have a chance for EV demand to catch up. This is my optimistic take.
I like it.
But Gabby's like really calling me out there. Like if only there was like a way to distribute the energy generation. So that's the little sarcasm. But I also wanted to highlight this in what you were saying, in that when you look at like a good business market, I'm going to look at Joan when I'm telling the story, because we typically try to sell into a market at Cherry Street for 15 to 20 cents a kilowatt hour power. And that's because we're on site. If you're feeding into the grid, it's a little bit lower, you're going to be below 10 cents a kilowatt hour. If I'm selling power to the EV market, we all drive EVs in here or have been around it, I think 45 cents, 55 cents, 65 cents a kilowatt hour. I mean, there's a lot of room. And that price, if you do the math on it, I'm an engineer, so if you do the price on that, based on the cost per mile, so 45 cent a kilowatt hour power is the equivalent of about $3 a gallon gas. So I'm not making life more expensive for people, but I have a huge gap to like, I just think that's exciting. And it is difficult because the infrastructure is not there, and you need the energy is consumed. All the good things I like as an engineer.
Good time to be an engineer.
It's a good time to be an engineer. Same.
That's a plug to anybody who's thinking about a career choice. Two. I'm going to pass that around a couple more times. So I'm going to give it to Cynthia. So Cynthia, you've been at the chamber heavily involved in all the investments in the battery supply chains, right? As well as the EV manufacturers here. So you've seen a lot of it. You've seen it from day one. What is the continued opportunity there for Georgia? Are we continuing? Is it continuing to build up this the second and third tier suppliers to those companies? Is it innovation? What do you see? Yes,
all of those. Yes, completely all of those. I mean, I think that if you look at Kia, they've got a really great model. I mean, Kia has their manufacturing plant set up to produce ICE vehicles and EV vehicles. So they can kind of roll with whatever's happening. So I think that is a good example of moving forward with where we're going in the time. Also, we're definitely continuing to attract the suppliers to all those companies that came here. I mean, that is the key. And then we're starting to get, different companies, not just supplying goods, but doing that research on like rare earth minerals and things like that. So we continue to see it thriving. And then I mentioned it before, but that technology is also going into other things, the aerospace and the eVTOL. And so it's being spread out in a different area, and areas that maybe can get a little more funding a little bit easier, but the innovation is all going to help the same thing, right?
So I'm going back to the electro-industrial stack. Right?
Yeah, exactly.
Like
it helps
eVTOL,
everything.
those
That's
components, very similar to EV, right? So
and like same thing with robotics and all of that. I mean, all of our I don't know if y'all have been to the Kia factory or the Hyundai factory. They're incredible, all run by robotics, right? I mean, obviously there are people there doing incredible things, making sure that they all run, but that innovation and this technology is going to find its way into things that are more mainstream. And I think that's where we thrive.
Yeah, we could innovate on the supply to the robots that we build here that then go work in our factories. I mean, that's a pretty strong little story there.
Yeah, correct. Cool. And I mean, back to, you mentioned it before, but Georgia is one of the only 2 states that has that mining capability. I think California is the other one. So, I mean, and Georgia Tech is doing incredible work, innovating all the battery technology and rare minerals and critical minerals and recycling of solar. So, I mean, we have such a great resource here to learn and push innovation, and then the companies behind it to help foster that. We need to make sure we have customers, right? So, I mean, it's like scaling a pilot. It's like exactly what you said. The hardest thing is to scale a pilot, right? So, that's a lot of where we come in, is who needs to meet who needs what partnerships need to be made, who needs to take advantage of this innovative solution from a startup that they don't even know exists, right? So that's kind of where a lot of my role comes in, is making introductions and making sure that people know what everyone does, and making sure that the technology that gets developed and the innovation that happens spreads around the whole ecosystem and all through the supply chain. I mean, it hits everything. I mean, we're one of the largest manufacturing prowess in the whole country. I mean, we have advanced manufacturing, endless, and a lot of that technology comes from this space. So I think it'll just get spread around and continue to make Georgia stronger.
Yeah. So I'm going to give Alex the last question on the meat in the meat and potato section. So this is specifically around EVs, right? The critical moment for EVs. I'm going to open this one up. You're obviously on Cleantech. You also got Cox Automotive close to you. In your perspective, like, what do you think what is going to help get through the critical, this critical moment for an EV, the companies, the players in this space?
Yeah, so first I was talking about this with Mackenzie Baines, one of my colleagues from Cox Auto, who tends to heavily influence a lot of my opinions here. So credit to her. But the way she was framing it really was that there's really kind of different aspects under this infrastructure umbrella. And I think 2 really important, that Gabby hit the nail on the head, is we have a lot of charging capability, but it's not always in the right place. Like one little example, with all those new EVs coming off of lease. How many dealerships are ready to take on hundreds of cars and charge them appropriately? Not many. Like, it's one of the things that Manheim has been really forward thinking and building out our EV charging infrastructure ahead of that wave. But there's a lot of these kind of unforeseen kind of pinch points. There's also the rural piece, the apartment charging piece. So it's just not there yet. And so I think there's still more work to be done on the physical infrastructure. The other piece is on policy. I mean, we touched on this, but I think so many people have whiplash from what's going on. And it's really hard to plan and invest and to build out something. And so, everyone loves supportive policy, but what I would settle for is just consistent policy. Really. And I think as long as there's the demand that we've all kind of touched on, solutions find a way. So,
Great way to sum it up. That's awesome. Well, I am going to pivot to our audience questions. We got a couple of them, and then we'll wrap it up here. But I'll take the first one. So, I think one of our listeners had some observations around supply chain, right? And his question was specifically around companies that are designing software supply chain solutions to kind of fix some of those challenges. So whether that's in the early stages of sorting or gathering, battery components or industrial components for, for circular economy purposes. What are you guys seeing? I know I almost might want to punt to another organization, but I'd love to hear your guys' perspective on some of this. Any software solutions you guys are seeing in the supply chain side?
Not so much in software.
Yeah.
But I know from the supply chain side, it's something, coming in through the solar industry and having it occur over decades. Believe it or not, steel has also had a lot of challenges and policy changing and some, political interaction. So one of the things that, has become part of my career is to try and source domestic supply chains. Because historically, whether I was doing innovation or just trying to get help fixing my equipment, when you're calling Germany or China or something else, you don't generally get as quick of a response as a startup. Being from Georgia Tech helps, but it wasn't everything. Like when I called from Intel Corporation, okay, people pick up and they help me. But when you're in a startup and innovating new products and you want assistance, having a local supply chain was huge.
Yeah.
That makes sense.
Yeah, I think on the innovation side on supply chain, my point will be, and I think I'm a big proponent of sort of merging of innovation ecosystems here. Georgia, we clearly have a logistics and supply chain expertise here. We have all the infrastructure, we have all the ports, right? I think clean logistics would be a great place for us, but I'm going to point the audience to the Savannah Harbor Innovation Partnership, SHIP. I would look to them. They've got a good thing going down there, and we're in my organization is trying to partner with them on bringing more clean logistics innovation to the state as well. So that was my way of not answering that question. But hopefully you'll find the answers there. Second question was around electric cooperatives. So so I'm going to try to read it and I suppose paraphrasing it. So I think this one's a little bit around cooperatives and their flexibility to have more time of use rates. And I'll be honest, like I think Georgia Power has a ton of time of use rates, and I have explored all of them just to figure out, because I'm an energy nerd, to figure out which one works the best for me, right? And I think it's changed a little bit as as I got an EV, right, and sort of move things around, and got new HVAC systems and things like that, right? And so all that stuff has been helpful. So I think first of all, I think Georgia Power has a ton. I think co-ops have a lot of flexibility to work with their members on this as well. But any perspectives from the group on flexibility of rates that co-ops have to sort of influence demand and time of use for obviously getting some of our capacity issues in the state to be small.
Yeah, I can say.
Go ahead. Yeah, that one's probably teed up for you.
Yeah, it is, so the time of use, and we hit it exactly right. That you spend a lot of time and effort to go look at it, and it can be complex to figure out which time of use matches up for you, and each utility can be a little bit different. But it's also highlighting the fact that we're consuming energy different. And what I would say on it might not necessarily be a direct answer, but one of the things about the variability in impacting the cost, that's all part of stabilizing grid functions going forward, is one of the things that I'm seeing as a potential big knob related to electric vehicle infrastructure as well as data centers consuming a lot more of the base load is the ability to turn off electric vehicle charging for level 2, like the trickle charge type stuff, can be pretty significant for helping to be a grid stability thing.
Yeah.
And so I think some of this incentives and actually having ways to provide more value to control that time of use functionality, I think is going to get better, and software and things like that are all going to help. But it involves actual control things and adjusting things on site as well as the software.
Yeah.
So there's a lot there with it.
And just going off of that slightly, which called software wish would be if these retail energy management kind of like softwares, like I'm also an engineer, have a home energy monitor installed and measure how much my HVAC's using and electric vehicles using, et cetera, just tell me which tariff rate I should be on. Like if I can just upload hourly kind of like consumption kind of like data, you should just be able to tell me you should be on this tariff rate and it'll be the most cost effective for you.
You don't want to make your own calculator? You don't think so?
One of the challenges for that is we'll do that for a customer and look at their rates, and you look at historically what they've used last year, 5 years, however, and then you do it, and then all of a sudden they double their expansion on something. And so it can be tricky, and even at your house, right? If you go from 2 gas cars to then having a gas and an electric, it can adjust how you consume your energy. And so it is a smart thing. And so like AI and all these things kind of integrate in together and have it learning. It's a great opportunity.
Yeah. Having worked in the electric industry a little bit with a metering company, I know a lot about what the co-ops do in this space. And they can be super fast to move, super flexible. And they were some of the first ones to put out, behind the meter storage for demand use when they want to, but then also backup for homes and businesses as well. So I do think the co-ops have a great model and can really test and innovate quickly on this particular topic. So and yeah, we have a ton of them here, by the way. It's not just, we're not just one big utility in Georgia, although we do have a big one. So yeah, cool. Well, with that, I will end the main part of the panel today. I want to thank my panelists. They did a great job. Thank you guys for bringing your expertise. It's so important for our ecosystem to have that expertise and to share it. And we're going to continue to do this throughout the year. Hopefully, bring up this topic more often because again, the conversation is the most important thing. So, appreciate that. If you do want to stick around, actually, I'll thank TAG as well. They're not in the room right now, but I do appreciate them broadcasting and bringing this to all their members as well. We were going to hang on and do 2 more questions. This is sort of a present look and then a future look. So if you want to hang on, please do that. Otherwise, you can catch it on the podcast later. Thanks so much. So now we're going to pivot to the 2 questions that that actually were the sort of choose your own adventure as the conversation went on. But so let's go with, so based on our conversation today, is there anything that I missed about 2025 or the look ahead that we should have paid more attention to? So maybe Cynthia? No,
it's fine. I have mentioned it though. I mean, I think that SAF is gonna progress further. Who knows what that means? But I do think that is a huge resource that we have in Georgia, the timber that we have, and there is a need to use it. And it would be a very strong use for that. So, and there's a lot of momentum behind it. So I think we're going to be talking about SAF, hopefully. And I'm just going to throw a plug in there for Super South for John, that hopefully we talk about what a great show Super South is and how it brought tons of people to Georgia to see the shining clean tech innovation that we have.
Timely, excellent, and 100% with you on SAF. So you may have answered both of those questions in one. So,
sorry.
Sorry, that's good. Alex.
So I think my hot take is I think people are sleeping on the OG of clean tech, which is energy efficiency.
Yeah.
Totally.
Thank you.
It's boring.
We've been sleeping on that forever.
It's decades old, but also as a market, it hasn't shrunk through any of the recessions since 1990, as far back as data I can find. So I think that's something that, especially in this super high demand environments, we're scrapping to find new solutions. We already have a lot of great solutions out there. And I think that I'm hoping just that there's going to be a growing appreciation for that's readily available that can help kind of bend this curve.
Yeah, I'm with you 100%. And I think a lot of the technology that's coming out that makes it less boring is that there's a lot of real-time technology now, right? Where you can actually get like, what am I using? And again, nobody really cares that much about electricity. They care about their bill. They don't really care about electricity. They just want things to work. But a lot of people are, if you can bring awareness in the moment, you can get a lot more action. And so I actually think EE is going to turn from it, maybe sexy for EE, if you will. So yeah, awesome. Jones.
So I'm gonna go very different direction and talk about like climate information infrastructure effectively. So the federal government's made it very clear that they're shifting priorities away from being the gold standard of hazard and environmental data in the country. And as an infrastructure investor, from a policy agnostic kind of standpoint, I'll just point out that like Bloomberg had a very nice piece come out last year saying like, for every 10% increase in like physical climate hazard risk, you see cost of capital go up by like 20 to 30 basis points, right? So there's a very tangible kind of like impact associated with investor uncertainty around these risks. And as the government kind of like withdraws, there is a white space opening, and I think we'll also see it play out this year of private kind of like service providers stepping into the space to say, okay, can we figure out how we price climate risk in real estate or in manufacturing or in all of these segments? And the cost of that's going to be borne by all of us, like when it's no longer socialized. The profit margins for those companies are now going to be like, okay, like your mortgage rate's going to tick up right now because we now need to pay the service provider to rate what the flooding risk in this house is because we can't get accurate flood maps anymore, for example, right? So that's going to be an interesting thing to keep an eye on.
Yeah. That is huge. It's more of the boring and sort of stuff that you don't really see every day, but important and critical. So.
Bringing it back to EVs, and kind of a follow-on point on that point, is that the biggest missing middle in terms of charging infrastructure right now, where it's just the smallest percentage of what is being built is multifamily and residential, which matters not just for future demand and for all the off-lease EVs that we expect to hit the used market, but actually for EV users today. When we've been looking at the counties in Georgia where EV registrations and vehicles in operations are growing fastest, and it's actually these counties that have much lower single-family home ownership rates than the overall state/country. So closer to 30 to 45% home charging potential, rather than the 60 to 70 that you'd expect in the state more broadly. And it's especially true for rideshare, so EV rideshare, which is why New York and Con Ed's curbside charging pilot, they were expecting 25% utilization at a lot of their stations, and had 75 to 99% utilization at a lot of them. And a lot of it was EV rideshare, which because of incentives have a much higher rate of EVs in rideshare fleets and also much higher VMT than the normal EV driver. So there are these real pain points that are a real business opportunity that kind of get overlooked because they're not as sexy as the premium off-ramp highway sites that everyone is kind of fighting over right now.
Yeah,
That's interesting.
makes a lot of sense. Makes a lot of sense.
I'll pick up off the room as well. What if we think about energy efficiency a little bit different in that, if we all shrink our energy down to 10% of what we do right now, but we all use that energy at the same 8 o'clock hour, we didn't get anywhere. And so the energy efficiency could also be coupled with, making better use of all under the umbrella of power sources. And so I think, in this, I think spreads to utilities and power companies where if we eliminate a lot of variability in summer peak season or winter peak seasons for when high voltage transmissions are the heaviest loaded, if we can level that out, we can serve more people with that, right? And I think it benefits data centers. And so some of that energy efficiency, I wonder if I, maybe do some rebranding there. Maybe we can do some stuff.
Yeah. Energy efficiency needs a rebrand. Yeah.
Well, I'd say
A new segment.
Yeah.
doubling down on Alex, it goes back to my grandmother. Georgia, friends at Georgia Power, I think it's Latanza always says the most valuable kilowatt is the one not used, right?
Yeah.
Like my grandmother turned her lights off Every time she left a room, she didn't leave the refrigerator open more than 30 seconds, right? So, and we have all these energy massively using practices that have become habits in our lives. And I do think that, we can take also all these high tech solutions are so important, but there is a low tech personal responsibility solution that we can all have of just be a little bit more mindful. Do you really need to do that search in AI, or could you just Google it, right? Like, please turn your lights off before you leave your house and set your thermostats to go down. I mean, I do think that the combination of a low tech solution and personal responsibility is also something that needs to be done. So that's just my own soapbox.
You're getting some thumbs up.
Yay!
Awesome. And then maybe I'll just open it up. Anyone else want to say something about what could be on this podcast next year? I know we talked a little bit about it, but Gabby's got one. All right.
I'm so excited. We have not talked about autonomous mobility, and that is
very
sad.
I was thinking that when you were talking.
My big, what I'm looking forward to this year is on autonomous mobility, because we have all of these pilots across several different parts of our transportation and electro-industrial stack infrastructure, whether it's freight, food service delivery, rideshare, etc. And I think the US definitely missed the boat on, global EV leadership and innovation. But we have a real chance on the intelligent transportation systems and autonomous mobility embedded ecosystem side, and Georgia has kind of become like a living ecosystem for both of those things across the entire state, that I'm really excited about for this year. Like, I'd love next year for us to be able to say that the US really took a big leap on embedded autonomous mobility across all of the sectors that it's currently operating and piloting.
Yeah, and I would love to see the efficiency benefits of that too, right?
Listen, urban transit.
Yeah.
There are lots of really interesting transit routes that are really inefficient, but you have some real flexibility with autonomous shuttles on that create some.
We're getting a lot of that. Yes, exactly. We're getting a
Yeah.
lot of that, and I will pivot off that a little bit. I go to a Smart Cities Tomorrow Mobility show in Europe every year, and most years I sit there green with envy, and this year we were so far ahead of so many other countries and areas in the area of autonomous mobility.
Yeah.
It's hard to do it in Europe, right? They can't mark the roads. They don't have the space. Like, Georgia is really, 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 really well positioned to do that, and we have a lot of autonomous pilots that are launching this year for the World Cup. So yeah, I think you're right on that.
Yeah, so excited.
I can't beat that. That was really good.
Yeah, that's a good one. That's a good one.
The only other thing I'll add, because I'm here to do all the EV plugs, is that there are 30 new EVs coming into the market, and we're kind of in this post-policy training wheels are off kind of stage for the industry, which I think is really going to force the industry to have to compete globally, whereas, it's a little painful because we were hoping that they'd have a little bit more time to get the lives together. But there's kind of a real charging forward and pivoting, lots of hybrids coming on, lots of new EVs. And I'm excited to see how the US automotive industry shakes out in the next year as they try to keep working on global competition in the space.
Yeah.
And I think we'll talk a lot about battery storage next time.
Yeah.
I want to talk about battery storage.
Battery storage, yes.
I mean, I want to talk about it in application. I mean, to me, I've been waiting for batteries to replace diesel gensets as the primary backup. Look, again, quiet. There's a whole lot of reasons why they're better. Again, I realize also that, you're displacing a very established industry there, but I do think like a lot of it's plug and place on a pallet, right? And so I do think there's just a huge opportunity there.
I think it complements it. It complements,
agree.
doesn't displace. It really truly does complement. And I think what you're highlighting there with, diesel gensets versus batteries, delivering the fuel, and there's a lot to be said for the storage.
And there's a lot of time, right? And so to me, it's just time, right? I mean, for me as a homeowner, like I can probably get away with a battery a business, right? They have to ride through potentially longer periods of time, right? And so the bridge, to make sure, and the biggest challenge with gen sets has always been starting them up, right? After they haven't worked. I mean, these are machines, they want to work, right? And when they don't, things happen, and so and the biggest challenge and, one of the biggest issues is non-startup. Batteries typically have to worry about that. So,
And Stratton Energy working on it right here in Georgia.
So anyway, with that, I will close today's session. Again, appreciate everyone who joined. This is a big investment in the ecosystem, and I hope we continue this conversation. Thanks so much.
Thanks, everyone.
Thank you.
Thank you,
Thanks.
bye.